So glad you're tuned in to Talk Erie and the Joel Natale Show. We are live from our Kingdom Financial Group studio here, and from Kingdom Financial Group for his regular check-in is certified financial planner and partner is Ben Reiter. Good to see you, sir.
Hey, good afternoon. Last day of March.
That means you got 15 days until tax day.
We're one quarter in for the year already.
Wow.
Yeah, isn't that funny? It's going, like always, it's going fast.
I haven't looked at my 401k lately.
That's probably good.
You think?
Well, yeah, for most people it is. Sure.
Let's talk about the market and the uncertainty, because we know that all the pearl clutchers on Wall Street, they don't like the uncertainty of the tariffs and all the moves and everything, right?
And what I mean by that you didn't look at your 401k, and that's good, is not because it's necessarily scary. I just mean the people who look at it minute by minute in the last 3-4 months, the last 6 months, the market's going to drive you crazy. If you turn on the headlines, if you just look and see what the S&P is doing today or whatever, is that it's been volatile because of that uncertainty.
We hit a new high in, I want to say, December for the Dow and the S&P. I think
pretty close to that.
I want to say not the Russell, but the NASDAQ, I think, was high just a month ago, like in February, right?
It was not that long ago, that's for sure. I'm not going to say exactly what.
But they had beat
3 months ago.
Yeah, they had beat that July deal, and and it's interesting how one man's uncertainty is another one's profit taking. Right.
Sure. Is that you do look at it as opportunities. The contrarian investor in me right now has to be very excited, actually.
That there's some deals out there.
Yeah, we've talked about it in the past of the one thing, you keep using the right word, the one thing the market hates the most is uncertainty, not knowing what's going on. And so what don't we know what's going to happen right now? It's all the tariff stuff, is that I've listened to lots of different fun economists over the last few months, the ones I like.
fun economists. That's an oxymoron.
Financial advisors are weird sometimes.
It's like you're watching Stephen A. Smith in basketball or something like that. It's fun economists.
Oh, my goodness. Yeah, some of them act like that, too. But, you listen to all the different opinions and you realize that they all have different opinions, which is really because of uncertainty. Nobody knows how this is going to play out, for the rest of the year, through the summer, the rest of the year of what's being rolled out. This week, I think, Wednesday, I think Trump's supposed to make some announcements. The White House is going to say some different stuff. It's coming out this week.
Well, it's Liberation Day.
Yeah, I have not, full transparency, I haven't even read what that means yet.
I don't know what it means.
I've seen that headline 4 times, but I haven't actually bothered yet. So I will. But the uncertainty causes that volatility in the market. I've spent the last 2 months talking to clients and people just about what's going on, and we've said, well, nobody knows for some of these things, and it's causing the market to go through these shifts, and we've seen it both directions, like always, where you're going to have a couple days where the market's down, and then all of a sudden it's popping back up, because that's volatility. My way of saying it sometimes is that volatility in the market sounds scary, but it's not necessarily a bad thing, because volatility means the market's going down and up.
Right.
And you're going to see that jig jog, the
should the investors be so worried about what comes out of the White House? Because the economy, what is it? I don't even know how many trillions are the gross domestic product, right?
Yeah.
But it's so much bigger than government policy.
Thank goodness. Yeah. Right. I'm a big believer in that. There's only so much that any sitting president really does to affect the market. I feel like, especially in modern times, it mostly is driven through sentiment, is that they can create that sentiment which pushes the market a little bit. And I like saying it creates emotional investing instead of fundamental investing. Instead of looking and saying, how's the economy actually doing, people are reacting to what someone is saying,
But let me follow up on the fundamentals then, because one of the concerns I've been hearing about is that like the big seven, like the big tech seven,
Yeah.
are severely overvalued on a POE basis.
Yeah. So this is fun. You're just giving me stuff to talk about
Well,
today.
and I don't want you to. I don't want you to violate some of the rules here.
Oh, no,
This
no,
is
no.
all educational. This is not advice.
Correct,
right?
correct. So one of the most interesting things in the market right now that I can say that I'm really excited about is that so far this year, inside of 401ks or retirement plans or diversified investment portfolios, is you can go and look at these things, is that we're starting to see the market spread out a little bit in that you have different sectors are behaving very differently from each other. Where the last 5, 6, 7 years, most of the growth has come from U.S. large cap growth stuff like the Magnificent Seven. That is what has grown the most. Well, this year, every time the market, I shouldn't have said every time, but most of the time when the market's going down, the Mag 7 stuff has been negative for most of the years. That you're seeing that actually slide back the other way, which is something that people like you and all sorts of people have been talking about of the last year and a half or so. Is those have been climbing so fast. When do they start to pull back?
Right.
I don't know if it keeps going that way, but you're starting to see other areas of the market actually outperform what the S&P 500 is doing or what the Mag 7 are doing.
I mean, at some point, wouldn't you want to take your profits on NVIDIA? And again, we're not giving advice out, but when you're dealing with multiples of what? 25 and 30? I'm hearing crazy stuff, Ben.
Yeah, and the hardest part is that you see an area like technology in the market where it's based off of when the price is screaming up. A lot of times it's based off of new technology that's coming out or a new product. There's a lot of talk about AI and all those different areas of how it's going to affect the economy, and so the stock may be shooting up based off of a perceived growth in the future or perceived income that would theoretically come into a company down the road because they're a leader in an area. Well, sometimes the market adjusts to it and gets ahead of itself because everybody gets really excited and says, this is coming, and the price will start shooting up. And you kind of question it. Eventually, when the real economic numbers come out, you can see the price shift back down. Any one of those areas in the market might really come through. They might keep taking off for you. But sometimes you're going to have winners and losers in areas of the market. I'm just excited because what we're seeing is actually a little bit of a misconnect in the last couple months. Everyone who comes in and that I talk to, immediately we want to sit down and talk about the market and how poorly or how rough it's been. But when you look at diversified portfolios right now that have things like bonds and other areas of the stocks and diversified holdings, they're actually doing okay. Not
even
good,
even
but
cash, I think, isn't doing terrible because
depends on what you have it in, but it's getting you're able to find a little bit of interest or a little bit of dividends in a lot of different areas right now.
I mean, we're not at 0.05%. We're at 2.5%.
Right. And I hope that comes down a little bit. I've said that before too, is that I like when interest rates are going down slowly, which I think is a good thing for the next 2 years in the market. I just talk about it because I do believe that the Fed has said that they're still in a lowering rate environment right now.
I think the last time I checked for my high yield cash savings, I'm doing better than inflation, which that has never been the case.
Right? Yeah, actually paying a little bit more. And I'm hearing from people that, there are banks out there, there's products, there's lots of different options that are actually paying you a little bit interest on that cash savings. Now, I wouldn't make the argument that means that while the market's down right now, you shouldn't be yanking money out of your investments to go put it more into cash. No. This is one of those times.
This is more for emergency. It's nice when your emergency fund is actually working for you instead of against you.
Or when you're saving for something. You're saving for a house right now.
We're saving for a wedding.
Yeah, saving for a wedding.
Yeah, right.
You're going to get a few extra bucks over the next 6 months.
Nice.
It is. And it's significant. And nowadays, so that is nice. I think that's probably a byproduct of those interest rates being higher the last, almost couple years now, where you're going to see more people actually feel the benefit of having money set aside,
So we have a fellow that comes on, he'll come on later on today when we talk politics, and he says, nobody understands what tariffs do. So maybe you could help us understand a little bit of what this is all about, because some people think, well, I'm just going to invest in American stocks and domestics because, they're going to be building more stuff here as the foreign stuff gets more expensive. But that belies the situation where everything is global. That American, American pie Chevy is built all over the place.
Yeah. Nobody completely understands it, and it's not it's because none of it's set in stone either.
He's moving a lot of parts.
We've seen that. You saw that a little bit in 2018, I think it was, the first time Trump was putting some tariff stuff, is that it ends up all being negotiations, and some of it sticks, some of it doesn't. Because the current administration wants something from any one of these countries that they're putting tariffs on. They want something. And if they get some of that, they might back off some of it. So what the long-term effects are very hard. Investing in it can be difficult as well, because I would tell you that I've received an uptick of phone calls in the last couple weeks of people saying, hey, I think I'm going to go buy a car right now, because they're afraid that all of a sudden, because there's tariffs on vehicles, they're going to run and go get a vehicle now. Well, all of a sudden, if all these car companies post a really great quarter of sales,
right,
what happens naturally to their stock price is that it theoretically goes up. If revenue is going up and you're selling more vehicles because everyone's afraid of a tariff, that's an interesting thought of that you look at. And that's just an example of how they can affect different sectors. So the hardest part, looking at it right now, or an encouraging part, is that I do believe that actively managing your investments, to look at it and say, hey, certain areas maybe we don't like as much because they could be affected by tariffs. Active management investments, theoretically, in a time like this, I would argue, becomes more important.
Active management.
Yeah.
Because normally you would say kind of, no, you wouldn't say that.
I don't.
You never say set it and forget it.
Yeah.
But my approach is, that's why I invest in mutual funds or index funds.
Yeah.
And let the experts figure it out.
And in the long run, that's just diversified money, and you're going to kind of ride what the market does. But for the last 20 years, as of 3/18, the last 20 years in the S&P 500, it's averaged 8.1%
a year.
Yeah, that's the annualized return over the last 20 years. Think of all the things that have happened.
So, yeah, I mean, I feel like, doesn't like your investment double in 10 years with like 7-8%?
7, that's the rule of 72,
rule of
right?
72,
Divide your interest into 72, and that tells you how many years before it doubles. Yeah, so you're right, 7 and 10, flip-flop it both ways.
Right,
you get 10%,
right.
It's going to double in 7 years, roughly.
Right.
So the tariffs, are going to be really interesting to watch, because it is, I listened to somebody this morning talk about tariffs is just Greek for taxes. All it is taxes.
A lot of the people that would normally be in favor of the policies of the Trump administration are really having a hard time with the tariffs.
Yeah, I think everybody's trying to wrap their head around it, because it's not, I would say it's kind of new, for this generation of people. The United States hasn't depended.
Well, no one's alive that remembers the McKinley generation.
No,
in the 1890s.
Right. So what does this mean? And even when they were doing tariffs then, it was a totally different economic system.
We didn't have an income tax back then.
No, right. Well, that sounds interesting. No. But even world economics were a lot different too, in that this global society. So are you asking me my opinion on it? I'm fascinated. The economist in me is fascinated of what the effects could be over the next 20 years. Because for a long time now in the United States, we've talked a lot about globalization and the rest of the world catching up to the United States. And you've got countries that are producing things that the United States no longer does, and they're growing and catching up. Personally, I think that things like COVID woke people up to certain areas of our economy that said, hey, we've got countries that we get all of our stuff from. Yeah. If we have problems, this is a little uncomfortable. And so it's been fascinating to hear the last couple of years that conversation of deglobalization. Mm-hmm. And if you're asking me, one thought that's in the back of the current administration's mind is, how do we speed that up a little bit And if you try to encourage growth here in the United States from companies by using tariffs, making it harder to produce stuff overseas or in other countries, that is a good
Right.
USA focused economic push.
It could be a good lever. We're talking to Ben Reiter from Kingdom Financial Group here on our regular check-in here. To me, there's several levels to this. So number one level is things that are strategic for the national security of the United States. There is no way that our integrated circuits, our chips, should be majority built in Taiwan.
One place.
One place, right?
Right.
How that ever happened over the last 10, 15, 20 years is insane to me, right?
They're good at it.
Well, they're good at it, and but we've done something crazy with that.
Yep.
Certainly military, anything related to the military needs to be built in the States. I think like solar, I feel like some key energy stuff should be US only, and certainly pharmaceuticals should all be.
Right. That's really fascinating stuff, and we won't go completely down the rabbit hole there, but solar is a big one. People should look into where are solar panels made.
To me, it's like a capital exchange to the Chinese.
Yeah.
Whenever we have government subsidied solar panels,
where's the money eventually flow?
Goes right to the Chinese.
It's kind of wild, and so I think that tariffs and that sort of thing definitely create some upfront pain. There are some pain, but there's a thought that in the long run, over the next 5-10 years, what does it actually do for us economically? And I know that certain people would make that argument and say this is eventually a good thing, but we don't want to put up with it.
So how much pain do you think people can handle? I think 6 months, and 6 months of pain could be a game changer in the midterms. There's a geopolitical approach, that thing that happens here.
Sure, that's the danger.
Yeah.
Like politically, I was kind of curious about it, really, of why. The only thing I'm surprised about, so I'll steer this back to the market.
Yes, sir.
Is that as of today, if you look at the last 2 years, and I'm literally I was looking at my phone before I sat down, but if you look at the S&P 500 in the last 2 years. As of today, the S&P 500 is up 36.5% in the last 2 years. As the market screamed up for a little while, coming out of 2022, 2023.
So what was that number again?
The last 2 year period, right from today, the S&P 500 is up 36%.
That's a lot.
Right, and we were just talking about how people think the market's doing so bad.
Yes.
In the last 2 years, it's up 36%. Right. I am a little bit of a believer of looking at things and trying to understand that when the market goes up more than 20%, historically, what happens next?
Corrections.
Usually there's going to be a period at some point, a correction period. And as we looked ahead to 2025 this year, there was an argument to be made. Last year was mostly all positive.
Yep.
And typically following years like that, you're going to have 1 or 2 bad months. You might have a bad quarter. You're going to have that pullback at some point. And so what's going on right now, I was hoping that it was going to be like summertime or later in the year.
Right, yeah.
I'm kind of surprised at how early in the year a lot of this happened. But it's not completely unpredictable. I'm not saying we predicted it or anything like that. But you look at it and go, is what happening right now in the market, is it new? Not really. Because if you just look at what the market's done, you typically have this big growth period and you'll have a pullback at some point.
Absolutely.
And that feels like where we're at right now is that. And so when you talk about how much pain could we take, nobody knows how long. That's the curious. That's just guesswork of saying, well, how long are they going to keep arguing about this stuff? Is it going to affect inflation? Is it going to affect that? You're going to start hearing a word. I see it popping up every once in a while. They're talking about stagflation now too.
Yeah, now that was a thing, and then I didn't hear about it. And now I'm hearing it again.
It's starting to pop up again, and that just means will the growth really slow down?
Right.
At some point. And most of the economic stuff right now, when you look at unemployment, GDP is going to come out with some numbers here pretty soon. But if you look at what inflation's done, most of that's been pretty positive, for a little while now. And that's exciting. So for them to look at something like tariffs, I'd rather them do it while things are good than when things are bad.
So you think this, if they're going to do this, this might be the good timing?
I wonder if that's what they were thinking. Let's go.
And I'm also thinking that at some point, the pendulum will swing to the middle. Yes. Again, right now it's just it's just swinging all over the place.
And it's all opinions.
It'll find a center.
It will.
I got like 1 minute left with Ben Reiter. I want to ask you about last minute tax strategies. I mean, has your office been full of tax returns?
Ever since COVID, taxes have been busy. I feel everybody's looking for a good accountant, and so to be able to get those taxes done is very important. At this point, you are trying to think, okay, hey, was there anything I was supposed to do as far as making prior year IRA contributions or putting some money away to help with the taxes? The last couple things you can do and get that done. This is always an interesting time of year because people are thinking about their finances.
Yeah, even if you file an extension, if you want to contribute to your IRA, you got to do it by the 15th.
Yeah,
right?
yeah, and if there's a couple other work retirement plans that have a couple goofy rules to them, but usually when people have those retirement plans, they do know those rules. But it's worth asking: is there anything else that I can do? Yeah. Because that's good long-term financial planning. So. Yeah, hustle up and get those questions in.
Are you finding that your clients are getting money back, or a lot of them paying? What's the deal?
Really not too big of a difference this year compared to a year before. It did feel kind of normal, and that's what we're hoping for next year. Is we'll see what that's a big headline for the markets. I think that's coming at some point because they're gonna do something with all the original Trump tax credits and cuts. Is when will that get passed this year, and how's that going to affect next year's taxes? I'm hoping that that's good news for the market too. So it's with the market being so volatile, this is definitely a great time to take a look at your diversification. Actually look at how you're doing. I'm encouraging people, do look at your statements right now. March wasn't fun, but if you look at year to date, I think you might be surprised if you're in a good diversified portfolio. If you're not, maybe it's time to talk to somebody.
I was going to say, if they need a good shepherd, where to call?
Absolutely. Kingdom Financial Group, right in Erie, downtown. We're 814-836-5234.
Or visit them on 6th Street.
Absolutely.
Thank you, Ben Reiter, certified financial planner with Kingdom Financial Group. Always appreciate it, sir.
Thanks, Joel.